Hello and welcome to PQ Prime. A very good morning to all the viewers. Clearly, if you see in terms of where markets go, 18,595, we are below the 18,600 threshold, and pretty flattish moves is what we are witnessing so far. Similar is the trend with Bank Nifty as well, but a lot of stock specific action is what we've been seeing. Joining us on the show is Avinash Gorakshakar to discuss all the counters that are moving in trade today. Avinash, good morning and welcome to the show.
Yeah, good morning, Kiran.
Avinash, let's start with the Adani group of companies. Clearly, they have been in focus as well over the last couple of months. From the last lows that we saw, the kind of recovery that has come in on majority of the names has been phenomenal. And now, if you see, they've completed a $2.65 billion deleveraging program as well. What does this mean, and how are you looking at the counters? What's your view?
Yeah, I think Hiral, the Adani Group stocks have shown a very smart, bounce back, considering the fact that about 2 weeks back, the Supreme Court committee has completely cleared all the Adani Group companies from the Hindenburg issue. That was a kind of a big relief for the group, and I think the group now made some announcements that they are raising some funds, from Adani Enterprises, the holding company, as well as Adani Enterprises. That actually made the markets more confident because growth variable which was missing earlier. I think the markets clearly understand that if institutional investors put in more money, then I think the growth momentum would continue, and that is exactly what we saw. We saw a very big bounce in these companies, but I think given the kind of dynamics which the group is going through, they have made the right announcements by deleveraging the balance sheet, reducing the pledging. My sense is that the selective companies within the group look pretty attractive. I think specifically from the cement pack, Ambuja Cements look pretty attractive. From the port business, Adani Port looks to be a very good risk reward opportunity. And from the B2C opportunity, Adani Wilmar looks pretty attractive since it corrected significantly from the top. So I think one needs to be a little careful here, but at the same time there is good value in these businesses because these are large cash flow generating businesses. And hopefully, I think if the numbers come out better over the successive 2-3 quarters, then I think the markets would get a further sentimental booster and some sort of more confidence in investing in these companies. So I think net things seem to be now on track. I think obviously the market would take some time to re-rate this company, but I think value definitely lies somewhere here. So investors should take a long-term call.
Right, so that's a long-term view coming in with regards to Adani Group companies. Moving on, you have a IGL that is in focus as well over the last couple of trading sessions. A 4% downtick coming in the last 1 week. What's your view? Because clearly, the management is expecting growth in the range of around 7.5 to 8% in terms of FY24. That's what they've indicated, and clearly there is some bit of bearish view coming in from a lot of brokerages post the earnings. What would you advise an investor to do with an IGL?
Yeah, I think IGL's long-term prospects seem to be quite encouraging, considering the fact that demand has now picked up quite significantly post-COVID. Plus, after the Kirit committee, the Parik report committee norms have come in, I think costing for most of the CNG companies has become more affordable and attractive. But I think last week some news flow came in from the government that in the Delhi region, basically there's going to be a mandatory requirement for electric vehicles, especially for aggregators of fleets which basically do delivery services and other kind of services. So that definitely is going to impact the overall demand. In fact, the management has stated that around 15 to 20% of their CNG volumes could get impacted. So I think it's going to be a wait and watch here, Hiran. But obviously, this may not happen immediately. We'll have to wait and watch. But I think, nevertheless, I think at least medium-term prospects appear to be good. Hopefully, we see that these kind of volume cutbacks will be compensated by higher volumes from other sectors. So I think we would prefer a hold. But yes, there is some negative, headwind which has started emerging, and that is probably why the stock is, trading a little weak in this kind of market.
Right. Another one that is in focus is the JK Cement. Recently, the stock has already touched a 52-week high of 3288 already, and now clearly they're talking about an acquisition that they're making in the eastern region. They're buying 100% stake in Toshali Cements. 157 crore purchase is what we're looking at. How are you looking at this acquisition from a capacity perspective? Secondly, from a geographical distribution perspective, and seeing the way the cement space is panning out right now, how would you view a JK Cement?
Yeah, I think from a geographical perspective, Hiral, I think the Eastern India market is pretty attractive because there are not many cement players operating here. Cement prices have been fairly remunerative here. So it's a good acquisition, but I think the acquisition is pretty small. So I think I would not be surprised that buying this company in the eastern part of the market is not going to significantly raise earnings at least for the next at least 6 to 12 months. So I think we'll have to wait and watch how they scale up the capacity, how they address this Eastern India market. But definitely longer term, I think value could emerge. In the near term, I think most of the acquisition, news flow has been factored into the price. And I think cement stocks have been in the limelight largely because a lot of news flow has started coming in on the infrastructure side from the projects, funded by the government. So I think net, I think one can expect a decent, upside in JK Cement, but I think over the longer term.
Right. Moving on from the IT space, Avinash, Wipro that is in focus, and this is on the buyback. The stock has been trading under pressure today. However, since the announcement of the buyback, the stock had seen gains of almost around 7 to 8% coming in there. 16th June, 445 per share, as well as if you see in terms of the promoters, they've also said that they will be looking to participate. What's your view, and what would you advise an investor to do with regards to the buyback?
No, I think the kind of numbers which Wipro reported in the fourth quarter. I think clearly the first quarter of FY 23-24 is also going to be relatively weak. But the buyback is definitely of a very large size. It's about 12,000 crores. The buyback price is also pretty attractive. So my sense is I think investors should take the opportunity to actually, obviously offer their shares in this buyback. Because my sense is the first half of FY 23-24 is unlikely to be significantly better. I mean, there are challenges and headwinds from the US and European markets. And compared to other players like TCS, HCL Tech, or Infosys, I think Wipro definitely has been a big underperformer. In terms of margin guidance, also they've underperformed. So I would believe that it's a good opportunity. I think the buyback is pretty large. Hopefully, the acceptance ratio is good. So investors should take the opportunity in offering their shares for the buyback. And thereafter, of course, once the June and the September quarter is over, one can take a fresh review based on the operational metrics numbers the company.
Right. An interesting, analysis that I was just looking at, that from the date of announcement of buyback to the record date, clearly in the last 4 to 5 buybacks that five buybacks that we've already seen, in three of the instances, the stock is actually corrected to the tune of almost around 4 to 11%. Is that a trend that could be anticipated this time around as well?
Yeah, I think it all depends, Hiral, on the acceptance ratio. I think if the acceptance ratio is not going to be very liberal and attractive, then I think the markets obviously would take it as a negative because unless and until the acceptance ratio is reasonably attractive, I think the buyback will actually not make any money sense for the shareholder. So I think there could be chances where you offer a lot of shares in buyback, but a very few number of shares get accepted. So I think that is probably the reason why the markets are discounting this factor, despite the fact that there's a very big difference between the current market price and the offer price, which is being given in the buyback.
Right. Another stock that's in focus from the pharma space is the Indoco Remedies. Now, yesterday, the stock was under pressure. This was mainly on the back of the US FDA, who actually gave them a OAI status on one of their plants in Goa. Now, they've got approval to buy 85% in a US generic marketer. Again, both these news items, how are you seeing Indoco Remedies? What would you advise an investor to do?
So I think, I would prefer to wait for some clarity to come in because, typically whenever such regulatory news flow comes in and the management commentary is not very clear, I would believe that it's better to wait for at least another quarter or so and then look at the operational numbers. Because if there is any further regulatory issue, then I think Indico is not a very large player. The balance sheet is also very small. So considering, if some negative surprise comes on the regulatory side, that could further impact the performance going forward. So I think it's better to wait and watch here. I think investors who have it can hold on, but fresh buying can be suggested only once we get some more clarity from the management side in terms of the commentary post this regulatory impact, and obviously after the June quarter.
Right. So that's with regards to Indoco Remedies. Moving on, you have a IEX. That stock is trading under pressure, and that's mainly on the back of the pricing declines that we've seen in the month of May. In fact, the traded power prices have dropped almost 30% on a year-on-year basis. What would this mean? Because the volumes have seen a higher single-digit growth, but it's mainly the pricing pressure that's coming in.
So I think see, one thing is very clear. IEX is now facing competition from new entrants in the power trading exchange. and I think this kind of price correction was on expected lines. I think the better part is here is the volume growth. The volume growth has been as high as almost 26% for across all their categories of contracts. And I think the markets are also looking forward that the gas business also takes off because gas volumes have also picked up on their gas exchange. One major trigger which the markets is awaiting is basically the carbon credit exchange approval. I think once that is received from the regulator, I think IEX could see a kind of a significant re-rating because the market opportunity for carbon credits in India is huge, and currently there is no other exchange which caters to this product. So I think you're right in saying pricing pressure would continue, which is a very normal considering that now there are two more exchanges which are competing with them. So I think near term, I think the market would look at these triggers to play out so that some re-rating happens. Otherwise, the business is not going to be significantly re-rated based on the power trading exchange. So at best, it's a hold. One would like to wait for these events to play out. It could possibly re-rate this company in the meantime.
Right. Another counter is a Bajaj Finserv that is in focus today as they've launched their Bajaj Finserv mutual fund and seven funds, which would include liquid, large and mid cap, balanced advantage, as well as flexi cap fund. Now, clearly, they would be starting to roll out their funds within the next 30 days, starting with the fixed income schemes. Now, taking the mutual fund business into consideration, a new segment that they've entered into, what would your view be?
So I think for Bajaj Finserv, I think the mutual fund business would definitely add a lot of value in the longer term. I think in the near term, there have been a lot of headwinds in the AMC market, especially on the expense ratio part, and we saw a decent correction in most of the other asset management companies. But for Bajaj Finserv, I think the biggest plus point is they got a very robust retail network, have more than 10 crore customers. So I think there's going to be a lot of cross selling of the mutual fund product to these kind of customers. And to that extent, I think the group is definitely well poised. They have a very strong balance sheet. They have the staying power. So I think over the next couple of years, here you could see this business generating a lot of good business for them. In the near term, it's difficult to precisely say what kind of impact it could make on the earnings. But yeah, I think it's a good beginning. Maybe over the next couple of years, you could see a decent contribution from the mutual fund business.
Right, decent contribution that could come in from the mutual fund business is what we could be looking at. Thank you, Avinash, so much for joining us on the show and giving us those views on the counters that we've already discussed. But a pretty flattish day of trade is what we're seeing, and that was something that we were staring at as well this morning. Don't see much gains from there on. Thank you so much for joining us. Lots more lined up on the other side. Please stay tuned to BQ Prime.